Well, we've hit 12 o'clock, so I'd like to kick off and welcome you to the City of Sydney's Reboot webinar series. My name is Kate Pinn and I'm your host for this special series this year. Now, before we begin our session today, I'd like to acknowledge and pay respect to the traditional owners of the land on which each of us meet. So as we share knowledge and learning today, may we also pay respect to the knowledge embedded forever with the Aboriginal custodianship of country. So today is the first of the 2025 Reboot webinar series, and our special series today is titled Finance Made Simple. Sorry, today's first episode. Now, the whole series is focused on practical and actionable insights to help businesses thrive across key phases of business, which is run, grow, and adapt. Now, some of you may know that Reboot was originally developed to support local businesses in the aftermath of the 2020 COVID-19 lockdowns. Believe it or not, it's now in its fifth iteration. So Reboot 2025 will be presented in 2 blocks of 5 one-hour webinars over lunch. And each webinar features a guest speaker, like today's Jacob, case studies and tips you can apply immediately to help you and your business thrive. So the Reboot series, it's brought to you by the City of Sydney and proudly supported by Service New South Wales Business Connect. Now, Cynthia will pop a link in the chat so you can find out more about how Business Connect can provide you with free, independent, tailored business advice, which is fantastic. Now, let me tell you what you can expect over the next hour. Our guest expert, Jacob, will first share a presentation for about 15 to 20 minutes on Finance Made Simple, followed by 2 case studies of how businesses like yours have applied the knowledge that he's going to share and made a difference to their business. We'll then close with about 15 minutes of questions. Now, you can type these questions in the Q&A box as we go, and at the end, we'll be collating those questions, and Jacob and I will be working together to answer as many of those as we can. There'll also be the opportunity at the end to sign up for next week's masterclass and to give us some feedback about what you loved about today's session, and here are ready for our next session next week. So let's welcome our first guest speaker, Jacob. Jacob Fahmy is a chartered accountant, a client director at Latitude Accountants. Now, we're very lucky today because not only is he fabulous at his job, he's also award-winning. 2-time 30 under 30 recipient in business advisory and specialist consulting, which is really just a reflection of his expertise and dedication to excellence, which you'll see today. Now, he's got a strong background in accounting, but not like all accounting people. He actually specializes in creative industries and small business, where he has this strategic approach and open communication that you will see sets him apart. He is passionate, not just about accounting, but also supporting Australian businesses. He's the co-host of a podcast called The Lat Chat, which I highly recommend. It's a platform with millions of views. He interviews and connects with some of Australia's top business leaders. Now, outside of work, Jacob is dedicated in business and self-development enthusiast, and he's always reading and learning and quoting something that he's just learned. Despite being a Sydney local, he is a passionate Broncos fan. I'm sure you won't hold that against him, and a Liverpool FC fan, but he channels his competitive energy into driving Latitude Accountants for his customers and clients. So very big welcome to you, Jacob. What have we got in store today?
Thank you so much, Kate. What an introduction. I feel a sense of gratitude towards that. So hopefully I can live up to such a big intro, but I appreciate that. We'll go into the Reboot slides here and what we've got. But basically, this afternoon now, is going to be a guide for small business owners to know your numbers. Here at Latitude Accountants, we have a vision and we have 3 missions, and I'll explain a little bit about that. But for starters, thank you to all of the small business owners who are here today. You are what we call the heroes of our community. We believe that the small business owner is the hero of the community because they're the ones who sacrifice their jobs to create jobs for others and to be self-sufficient. So a huge amount of gratitude and thanks for jumping on and furthering your business on this webinar. And the second thing we do is if we can help you understand your numbers, manage tax, and navigate the small business journey, it means that you can achieve the goals that you set out for yourself and achieve the dreams that you once had when you first started your business. So maybe for some of you that was a while ago, and those dreams, are still in progress, and maybe you've already achieved those. So this is something we've put together to help you do that. Now, a little bit about me. I won't go through too much more because Kate's already done an amazing intro. But yeah, award-winning chartered accountant. I actually needed to win some more awards because they were all 30 under 30, and I'm now 32 with some grey hair. So thanks, Kate. I'll just
You're
in the
welcome.
background, I'll just in the background as well start a timer to make sure that we're all on track. So I've gone ahead and done that. All right. Now, the first thing I want to do is intro the slide with starting and growing a business is like a walk in the park, right? You have this business idea, you put this business together. Starting and growing business is like a walk in the park. Kate, do you want to flash on the first poll here? Hands up if you think, or you can vote. By the way, I want to make this as interactive as possible. So we've got a few little polls that are going to come up. Hands up if you feel like starting and growing business is like a walk in the park. How confident do you feel managing your business finances? Because of course, starting and growing business is like a walk in the park, right? Are you very confident? Are you somewhat confident? Or are you not confident at all with managing your business finances? You can feel free to click some buttons, and then we'll close the poll in about 20 seconds. So we're going to do some rapid fire because we ain't got much time here.
Yep, we're going to be very quick. I'm going to end it now because we've got 90% answered.
Go
So
for
let's
it.
see.
Fantastic. Do you want to share the results there, Kate?
Absolutely.
Okay, so we've got very confident being 10%, somewhat confident being 67%, and 24% not confident at all. So great for those 10% who are very confident. Hopefully you get something out of today, but if you're somewhat confident, if you're not confident at all, this webinar is designed to make sure you're across it. So starting and growing a business is like a walk in the park, right? Except it's a walk in Jurassic Park. That's why you're not confident with it, because there's all these things trying to get in your way of achieving your goals, making some profit and bring some income home to your family. There's, the ATOs is always there to make sure that they get their piece of the pie. Your creditors are down your neck calling you on getting bills paid. Your staff want to grow and want to expand and have dreams of their own, and you're this business owner managing all of these things. So it's not unlikely that you would feel like I'm in Jurassic Park and there's a lot happening. In fact, I'm going to put up the small business failure statistics because some business owners feel like they're the only ones who, am I doing something wrong? I'm not making money, I'm not making sales, things aren't going the way I planned they would. So I just want to show you a bit of a reality check on the success of small business. So after year one, 20% of all businesses have already closed. By year 5, only half of business owners are there still in that business journey. And by year 10, if you're in your year 10 of business, by the way, hats off to you. You are in the top 20%. You're in the upper echelon of businesses who are still around, who have wavered and who have not wavered, and who have lasted through all the various challenges that businesses go through. In fact, a few more statistics just to make sure you understand that you are not the only one. There are 2.1 million businesses in Australia. 90% of them are small. So you are in fact the backbone of this country. Of the small businesses, 60% either make less than $200,000, which I don't know about you, but I'm living in Sydney, and that used to be a big number, but that's not as big as it once seemed. Are not profitable. It's very common that a business owner walks in and they're not profitable and they don't know why. They lose money or cannot afford to hire a team. So if you're thinking that you're a minority in this, you are not the only one. You are up there with all business owners who are trying to have a crack. And so to help you get some quick wins, here are some 4 commandments of business that I encourage every business owner to go through. And that is, the first one is, I need you to structure your business effectively. So we're going to go through a few things. This is the 4 commandments that cover a bunch of stuff. We're then going to go through your profit and loss. We're then going to go through your balance sheet. We're then going to go through your cash flow. And there are key takeaways. And I'm going to stop and say, take a photo of this slide, share this, do this, and then hopefully you're going to get a ton of value out of this. But before we can talk about our numbers, we need to capture our numbers. And so before we can even think about, okay, how much sales am I making, blah, 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 I need you to structure your business effectively. This is going to help you from both an asset protection and tax strategy, but I need you to understand the difference between a sole trader, company, trust, what structure you're operating out of, because each of these have different impact on your business numbers, on your taxes, and on the way you draw money out of your business, you pay wages, you do all these things. So I'm not going to go through that in detail because I could take up 20 minutes doing that. So structure effectively, whether you're a sole trader company, trust, who owns the shares of your company, all these sorts of things. I need you to go have a chat with your accountant about that and ensure that it is the right structure for you. I want you to keep your private and business expenses completely separate. Notorious B.I.G., if you walk into our office, there's a quote of him on the wall, and he says, keep your family and your business completely separated. So I want you to know that when you start a business, you need a separate business bank account. And for you to capture your numbers effectively, you cannot just run your private life through your business account. Your company is not you. You're two separate legal entities. And if you're a sole trader, you still need to separate yourself from the business to make sure it's commercial. And so the biggest bane in any accountant's existence is when you're running all your private stuff in your business and you think you're making this money and you're spending it privately, and then you get this massive tax shock when really the tax treatment is different, and you can't find all of your business expenses because they're just convoluted with all your personal stuff. So make sure you keep a private and business bank account separate. Set aside money for tax. Everyone always says, what do you mean I have this much on my BAS? What do you mean I have this much tax to pay? I can predict how much tax you're going to pay. It's very simple. Every dollar of sales, if you're registered for GST, 10% of that's going to be put aside, and you need to report that on your BAS. Every time you pay wages, you're not just paying wages, you're actually paying super, plus you're paying withholding tax, and then you're transferring the wages out to your staff. So you need to make sure you're putting aside those amounts into a separate account so that when tax time rolls around, so that when end of quarter BASs roll around, you're not getting that tax shock and you're in tune with what's actually happening. And the last one is you need to keep good books and records. Without good data, there's no point interpreting it because the data is only good as the input. So keep good books and records. Use a software. We recommend, I'm not going to make a recommendation. I'm going to give you a few. There's MyOb, there's QuickBooks, there's Xero. There's a bunch of options. It's 2025. You can keep track of your data, and you need to keep track of your data for both compliance and visibility. So here's a quote I always like to say. Warren Buffett says, numbers are the language of business, okay? And it's our job as your accountant, and it's your job as a business owner to take those numbers and bring them to life. Warren Buffett didn't say this, I said this, but ultimately numbers tell a story. We've got it all in here as one quote, but I'm not going to put myself alongside Warren Buffett, so I've just left it as his. So ultimately, numbers tell a story. Okay, so we're going to go through what is a P&L, what is a balance sheet, cash flow management, and we're going to go through a couple of case studies, real life examples, taking out the names of these clients, but real life examples of how we've done this. Okay, now I've got on screen a glossary of terms. I'm going to throw around a bunch of terms. A lot of it's accounting jargon. So I want you to take a photo of this screen. Okay, pause and take a photo of this screen. And this is going to help you decipher what I mean when I say gross profit, net profit, your debtors, i.e. people that owe you money, net assets. I'll go through all of these, but I need you to take a photo so that you can follow along and so that you have something to take away so that next time you speak to your accountant, it's not just you actually understand what's happening. All right, so I'm going to leave it there for another 2 seconds. 1, 2, next slide. Profit and loss. The profit and loss is the performance engine of your business. It tells you 3 things, okay? So think about your profit and loss as the motor, the HP or horsepower, the engine that's driving your business. It tells us how much sales are coming in and how much expenses are going out. And before I go through every part of your profit and loss, how often do you review your profit and loss is a question I have for you if you want to answer in the poll. And the reason I have this question is you would be shocked, and I said this in the promo videos, how many times someone walks into my office and says, and I ask them, sorry, what was your sales last month? What was your sales last quarter? What was your sales last year? You would be shocked at how many people say, I have no idea, I haven't even looked, I need to check, blah, blah, blah. If you don't know your sales, they are the lifeblood of your business. You need to be across that. No sales, no business. I always say that. So we've left the poll open. I'm going to give you 2 more seconds, and that's going to be shared now. Okay, so weekly, 14%, excellent. Monthly, 38%. Yearly, 19%, never 30%. That means, I'm no accountant, but almost half of you have said that you either never review your P&L or you wait till the end of the year, by which it's too late to even affect change on what's happening in your business. I want you to make sure you're pulling up your P&L or you're reviewing your sales on a weekly basis. Things get done when they get tracked. So you need to know and have a finger on the pulse of what are my weekly sales. Okay, so that's really, really important. I'm going to go through a P&L and I'm going to go through some key action items on how to affect change on your P&L. So your P&L is made up of 3 parts, and you can see a sample one through Xero's demo company here on the right. It's made up of sales, which are made up of units and price. How many widgets did we sell and how much did we sell them for? That's reflected in our sales. If you're product based, it's widgets. If you're service based, it's actually hours. How many units or hours did I pay staff and how much did they deliver in terms of sales to our clients? So your top line, sales. That's the most important line. You don't have sales, you don't have a business, okay? So sales. Your next line under that is direct costs. For every dollar of sales I made, how much did I need to expense? If you're a product-based business, this looks like how much did I pay for the product and how much am I selling it to the consumer for? If you're a service-based business, it's how much did I pay someone for every hour of wages? Therefore, how much did I sell those hours of wages for? That's sort of your direct cost, okay? Your direct costs are either direct inputs such as product costs, shipping, postage, and if you're in a service-based business, your direct costs are your labor. How much do I pay my labor that is productive? Admin is not there, but anything that's deriving revenue is. Then there's your overheads of your business, okay? Your overheads of your business, think about this as the body of an aeroplane. So you want to keep the body of your aeroplane light and nimble, light on your feet, okay? And so the reason we want to do that is we don't want to have drag. We don't want to bring our business down because we have bloated overheads. What we saw on the back end of COVID was this. A lot of businesses were doing well sales-wise. They were doing well direct cost-wise. And so they expanded their overheads. They took up a new lease. They hired more admin people. They expanded, only to realize on the back end of COVID, business contracted. So your sales contract, but your overheads were still bloated. So what we've seen now is a lot of businesses with lower sales and higher overheads, which are drowning and leading to a loss in that business. Now, I want you to focus on one word, 2 words actually, gross profit. So your sales minus your direct cost, a good gross profit margin is typically, I would say 40% to 50% is okay. 50 to 60 is good. 60 plus, 60, 70, 80% gross profit margin, love it. Let's talk about your business, okay? Overheads, you need to make sure you can cover your overheads and then you're left with a net profit. Net profit margin, this is why you got into business. The difference between a salary and a business owner is the net profit incentive. This is the most beautiful thing, in my opinion, that exists to motivate people to start and grow businesses. Because if you're making profit, that's a reward for the risk that you took, the sleepless nights, all the hardships. Your net profit's a reflection of that. If you're not making net profit, you're not being rewarded for your efforts in business. And we could make the argument of maybe we can get a job because that might honestly be easier than all the sleepless nights and all the sacrifice and everything you've had to make. So what are the 4 levers of profit? Now we know that, okay, what's our sales, what's our direct costs, what's our net profit margin? You need to make sure you're reviewing these weekly. Pull up a report from your accounting software to go through that. And how we're going to change those results is these 4 levers of profit. The 4 levers are the following. If you want to make profit increase, it's very simple. Increase your sales volume, increase your sales price, decrease your direct costs, and decrease your overheads. Take a photo of this slide. These are things you're going to implement over the next month or so of your business. Small business owners are great at doing work. They're not good at charging for it because they always undervalue their services. So I need you to think about your price. That's going to be the most quick win for you to get your profits up. Because by the way, when you increase price by 20%, you're actually increasing your profit by much more than that. Okay, so I need you to have a think about that. We've got a poll on here. Which of the 4 profit levers do you focus on most? Okay, I'm going to extend this section to 20 minutes because there's still a little bit to go through. Which of the 4 profit levers do you focus on most? Increasing sales, raising prices, cutting direct costs, or reducing overheads, or none? None's not an option on there, but I assume if you're hesitant to vote, there's probably one that you think. Okay, let's show on screen. Increasing sales, raising prices, not as high, cut direct costs. Okay, this is common small business owner world. We just need to work more. We just need to increase our sales. But have we thought about, are we even charging the right amount? Did you know that if you double your sales and lose half of your clients, you're actually in the same position, but you're doing much less work? Did you know that? So you could double your prices. I'm not saying you should, but if you doubled your prices tomorrow, and did half the work and lost half your clients, you're actually got a better business because you're doing half the work for the same amount of sales. Okay. And so I don't want you to do that, but I really need you to think for every percentage point you increase your sales, there's actually 2 or 3x return from your net profit position. I had a little Excel spreadsheet, but don't worry about that. It's too geeky. And so I want you to know that. I want you to know for every dollar of sales that you increase your sales price, you're actually getting more net profit for that. So I want you to have a look at these levers, and I want you to pull these levers when at the bottom of your screen I have no net profit. These are all the things I can give you. Okay, there's no other way. This is how you're going to increase your profit. So take a photo of that and have a go, and hopefully you got some value out of that. Okay, I'm going to go to the next slide, the balance sheet. This is, as an accountant, very sexy. Okay, so the balance sheet's a sexy report. Not so sexy to business owners. For some reason, they hate this report and don't even know it exists. So do you want to flash there might be a poll, but we'll get there in a minute. So what is the balance sheet? The balance sheet's very simple. It's a health check of your business. It's the health of your business. How much assets do I have and how much liabilities do I owe? In simple terms, how much is owed to me and how much do I owe to other people? If there's more owed to me, or I have more cash or more receivables than I owe other people, I've got a positive net asset position. If I owe people more money than they owe me, I'm in a shortfall. So if I liquidate this business tomorrow, I actually owe money. This business is actually costing me money, right? So which of these terms do you find the most confusing? Assets, liabilities, or owner's equity? Confuses a lot of people. I'm going to go through a basic balance sheet in a minute, but I want you to let me know which one you find the most confusing. Owner's equity. Owner's equity is very simple. It's your net assets. It's your assets minus your liabilities. Okay, so how much positives, how much people owe me, and how much do I owe other people? The difference is your equity. The higher your equity position, the better your business health. The lower your business equity, the lower your business health. Sometimes there's even net negative equity, and in those scenarios, I'm talking to the owner around what are our options in terms of how we're going to make more money and grow this business before it's too late. Let's go through a sample balance sheet. This is a sample balance sheet. Always starts with most liquid to least liquid, assets to liabilities. Assets being cash in bank, then accounts receivable. So cash at bank, very obvious. Accounts receivable, how much do people owe me? Fixed assets, how much computers, equipment, cars, vehicles, whatever is on my balance sheet. And then liabilities is how much I owe other people. How much is in my accounts payable? How much do I owe the tax office? How much do I owe for creditors? All that sort of thing. See this net assets, 16,706. See how equity is the same as that? So that's what equity is, assets minus liabilities. Now, negative position, I'd be telling this business how we're going to come up with this 16,706 or how we're going to make more profit because you currently owe people more money than they owe you. So we have a problem with this. Building a strong balance sheet is very simple. Increase your assets, manage your liabilities. I'm not here to say liabilities are bad because sometimes liabilities help our grow our business. For example, if we buy a piece of new equipment, sometimes we need a loan to buy that equipment. I'm not saying that's necessarily a bad thing, okay? But I want you to understand that you have to manage your financial position and you can't put yourself in a position where your negative net assets keep going more and more negative. That means that this business has no legs. I'm putting in money to this business, it's being burnt, and something is not happening here. There's a link between the P&L and the balance sheet. Let me give you a quick example and then I'll go into cash flow. I've got 2 more minutes to do this. So the example is this. Let's say we make a profit. The most common question I get asked is, we made a profit, where is it in my balance sheet? Hands up if I can't do that, but the most common thing is I've made a profit, it's not in my bank account. Where is it? And so oftentimes, yes, you've made a profit, but maybe the people you invoice haven't paid you yet. So it's sitting in my accounts receivable. Maybe I've used that profit to pay down debt. And so it's sitting in, yes, my liabilities have reduced, but I've had to use my profit to reduce them. Maybe it's sitting in, I owe people money and I've had to pay that. So yes, I've made a profit of $10,000, but that cash has moved and I've had to pay other people that I owe. So that brings us on to cash flow management. Yes, it's great to make a profit, but how do I manage my cash once I've actually made that profit, right? So you've pulled the levers, you've made the money, it's sitting on your balance sheet, and now you need to move that cash around. There are 5 cash flow traps that I don't want you to fall into. And it's very simple. Everyone who has cash flow issues has one of these. you either don't make a profit, everyone thinks they have cash flow issues, then I look at their profit and loss and they're in a negative profit position. How can you expect to have good cash flow if you're not making money? Okay, so visit the profitability, move those levers, make a profit. Okay, then once I've made profit tick, am I invoicing immediately or am I waiting ages to invoice? Have I done a job and waited a week to send that invoice and move the cash flow cycle and whatever, and people just owe me money and I don't have the money in the bank, but people owe me that money? So that's invoicing delay. No cash flow forecast. If we don't forecast and plan, if we fail to plan, we plan to fail, right? And so setting a budget or setting a forecast will help you along this journey. Poor debt collection. Small business owners are great at being great banks. And so they say, nah, don't worry. Well, yeah, you owe me money, but that's okay if you don't pay, blah, blah, blah. Dude, if I've done the job for you and you owe me money, please pay me that money. If you don't pay within my terms, then I'm going to call you again. And if you don't pay again, I'm going to get a debt collector involved. And if the debt collector is involved, then I'm going to issue you with a notice of demand, blah, 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 blah. Don't be scared to follow the process. You've done the work. You deserve the money. You're the hero of our community. Get paid. Don't leave yourself in one of those positions where someone goes under and you're left holding the bag, please. Okay. Poor debt collection, and you're mismanaging your creditors. You might be the type of person, as soon as someone invoices you, you've paid, but you're still waiting 30 days for the sales to come in. Do not abuse your creditors. There's a big difference, but make sure you have a good cash flow cycle where you're paying on time, but you're making the most out of the payment terms. Okay. That's what we need to do here. We're almost done, so we'll wrap up. And I'm going to go through some case studies in a minute, but some key action items. I want you to have some key action items. Take a photo of this slide, please. Please, please, please take a photo of this slide. If you get anything out of this slideshow, I need you to do this. Pull your 4 profit levers. If you look at your profit and loss, for those of you who never look at your profit and loss or look at it yearly, your homework tonight is to review your profit and loss. Go into your accounting software, call your accountant. I'm sure there's a lot of accountants getting calls after this webinar. But get on the phone and say, hey, what's my profit? Can you show me my profit and loss? I had a chat on the Reboot webinars today, and they told me that I have to know my sales, and I have to know my direct cost, and I have to know my overheads. And I have to pull these 4 levers to help me make money. Then you're going to improve your cash flow. Now that you've made the profit, how do I move the cash? I want you to invoice as soon as the job's over. I want you to have a debt collection system and have someone on standby ready to call up and get your money in. A small hack on this is make sure someone else in your business does it, because you're the business owner and I don't want you to ruin the relationship with your customer. So get a third party to get involved and collect that debt, because it's a bit awkward of conversation. Then the final thing is you're going to review these numbers monthly, if not weekly. I've given you the leeway of doing it monthly, but I want you to review your sales, your gross profit margin, make sure your gross profit's above 40, 50%. Your net profit, I need you to review. That's why you got into business. No net profit, maybe we think about getting a job. Debtor days, how long it takes money to come in. Your cash at your bank, I need you to review this often, because that's like, we have no cash, we have no business. And net assets. Is our business getting stronger? Is we getting into a more positive position, or are we going into a more negative position? And get your accountant to help you with these things. Remember, numbers are the language of business. If you're not good in the language of numbers, you need to find an interpreter who is good in that language, and that person may be your accountant, may not be, but you need to have a chat to someone around what the heck's happening in your business. So now I'm going to go through some case studies to go through this. Before I do, Kate, how am I going? All good for time?
You're spot on time. Would you like
Fantastic.
to poll for key action items now, or wait till your
Yeah,
case?
let's get a key action items poll, actually. That'd be great. Okay, after today's session, which area do you want to focus on improving? Profit margins, cash flow, business structure, or just general record keeping? Because we're not even at a point where we can look at our P&L because we're not even keeping good records. What are you going to focus on? I want you to be as practical as possible. The only way to do this is to do this. So let's have a look. And you've got all the tools here. Okay. Here we go. Profit margins. Whoa, very even split. Nice. Profit margins, 23%. Cash flow, 26%. Business structure, 28%. Record keeping, 23%. So there's a bit for everyone to do here. Okay. So profit margins, the 4 levers. Cash flow, having a look at those 5 cash flow mistakes and making sure you're fixing those. Business structure, get on the phone to your accountant, and I don't care who, just make sure you talk to someone about, why am I a sole trader? Why am I a company? Why don't I have a trust? How do I pull money out of my company? What the heck's happening? And then record keeping. get in touch with an accountant or bookkeeper. Bookkeepers are worth their weight in gold if you find the right one. And so you want to make sure that you're managing your records, because without having the data, we can't measure it, we can't make change. Alrighty. Now, I'm going to go through
Jump into those case studies, Jacob. And
our
if
case studies.
while Jacob's talking, there's a Q&A button along the bottom. Pop in there and pop in any questions that you've got for Jacob and I to answer. He's got about 10, 15 minutes to chat through these case studies, and then there'll be live Q&A. So get in your questions early so we're ready to answer those after these case studies.
Fantastic. Okay, this is a real life scenario. I won this client 2 years ago. Okay, I've not given much away because it's confidentiality, but I want you to know the following. They're a service-based business. They're actually not even a consulting business. I've had to make that up. So they're a service-based business, okay? And we identified a few issues when they walked in the door. They had a negative net profit, so they weren't making money. They had $1 million of sales, by the way, and they weren't making money, which is more common than any of you could imagine. There are people on your Instagram, there are people online, there are people who appear to be living the life and making the sales and making the money. And I can assure you, there's a lot of those people who are not making any profit and who are hardly paying themselves a wage and are scratching to get by. And you then jump on social and feel bad about your business because you can't pay yourself a wage, hire the next person, do all the things. So I want you to understand that. So number one, $1 million of sales, no net profit position. Balance sheet, owed money to the ATO, a lot of money to the ATO. How did we resolve this? They're the facts. How did we resolve this? Number one, I sat down with them and I said, okay, how many services are you doing? And they said, like, we're doing like 6 services and we're white labeling this and we're doing this and blah, we're doing this and blah, blah, blah. Guys, do one thing, do it well. Okay, that's my advice to every business owner. And especially when a business owner tells me I have 5 businesses, let me tell you, if you had one good business, there wouldn't be much of a need to have the other 4. Okay, so I know I'm harsh when I say this, but numbers are a harsh reality, and so it's better you get this advice and you have 10 service lines, none of them are profitable. You're working 24 hours a day. You're not seeing your family. You're not seeing your kids. You're not in a good health space. I want you to understand that you need to do one thing and you need to do that well before you introduce another service. Stop looking for the next, the lady in the red dress or anything else. I want you to get clear, pick your most profitable service. For example, if you're an accounting firm, we cut off bookkeeping. The reason we cut off bookkeeping is that we wanted to do one thing and one thing well. Bookkeeping, I refer out, and so we do accounting and tax. That's what we do. We're not doing anything else. Not financial planning, not broking, not nothing. That's what we do. That's what I went through with this business owner. They cut off all the crap and they did one product or service and they did it really, really well. And they picked the most profitable service, the one they could gain the most efficiencies in. And so that works for them. I also had a look at what were your wages. When I looked at the wages, compared that to the total sales, it was way, way off. We were so overstaffed and it's no wonder we weren't making any profit. Business owners are great at this. We'll pay all our staff, we'll pay everyone else, we'll do all the things, and then there's none left over for ourselves. There's a book you should all read. It's called Profit First, and that will give you the mind frame. There's actually 2 books I highly recommend, and I want you to write these down. The first is Profit First, and the second is called the E-Myth. And the E-Myth talks about business owners getting into business because they're a good technician. I'm a good lawyer. I'm a good marketing person. I'm a good this. I'm a good that. So I'll just go and create a business doing that thing. Except all that happens is that I'm a marketing expert, so I'll do marketing, and all I end up doing is marketing. But how about creating a business? We forgot to create the business. And so that's what E-Myth will help you resolve. So I've got here another good book is The Pumpkin Plan. Really good. Same author, Mike Michalowicz. Just read any of Mike Michalowicz's series. He's really good with that. Now, too many service lines. I want you to focus on doing one thing. Wages were too high. I want you to have a look at your wages and compare it to your sales. Generally, what I like in a service-based business is that our wages are no more than 30 to 40% of our sales. If our wages are higher in percentage to our sales, we have a problem. Our staff are either not productive, we have too many staff, or we're not giving our staff the tools and resources they need to succeed. I'm also very critical of the business owner, by the way. If you think that I've hired staff and they're crap, I'm sorry, your staff are only as good as how you resource them and how well you train and develop them. Okay, so it's as a business owner, you are ultimately responsible for everything. It's one of the beauties of being a business owner. It's also one of the hardest things about being a business owner. It's ultimately you are the problem and you are responsible for the highs and the lows. So I want you to own that. But anyway, in their scenario, we got rid of some sales staff because they weren't producing more sales and they were taking up way too much in terms of wages. Overheads needed to be rinsed. They went through the COVID thing and they went through and took up more leases and did all this and did all that, except business changed and we're not profitable. And do we really need these overheads? I had a look notably at their accounting fees and they were paying 35 grand for their accounting fees on $1 million business. I can tell you it's probably a bit too high. Okay. Now, so we had a look at, that's actually how, we engage and we help them out and support them. But have a look at your overheads. Just get with your accountant. Have a look at your subscriptions. There's always subscriptions that you're paying that you haven't used the software in God knows how long. You're not even getting efficiency out of the software because the software is only as good as you are using it, right? They had a bad debt issue. If you look at their P&L, they had a bad debt write-off. They were invoicing larger customers and they waited too long to hit those customers up and say, hey, you need to pay us. The conversation got awkward. That business fell apart that owed money to them and they didn't get the money. I have seen business get destroyed because the people that owe the money have not paid them and have gone insolvent because probably someone hasn't paid them and it just trickles on to everyone. So I want you to be tight around your debtors. Not enough automation. We, in this scenario as well, didn't have, so the wages solve automation. Like I can just hire a bunch more people and they'll get the job done, or I can implement one savvy tech tool and that will save me having to hire 3 people to do the role, right? So you need to understand there's a balance between automation and staffing, and the mindset I want you to have is that, like, everyone thinks that ChatGPT and AI is going to take their job. Okay, here's my position on that. In the Assyrians' time, the Assyrians created the wheel, and the farmers thought that the wheel, because now they had wheelbarrows instead of having to walk everywhere, the farmers thought the wheel was going to take everyone's job. And then there was the Industrial Revolution, and everyone thought their job was going to be taken off them. And then there's the AI revolution. Everyone thinks their job is going to be taken off them. Except what do we look at when we look at the unemployment rate? We're currently a circa 4% unemployment rate, the lowest we've ever been. We peaked at 3.5, and we're now at probably 4. AI will assist you, and in my opinion, will actually drive down the unemployment rate because more people have stuff to do. We figured out a way to automate this. So what's the next thing? I believe in human ingenuity, and I believe humans have a bright future because we'll just find more problems to solve. We've proven that over 6,000 years. So I'm happy with that, right? So anyway, I want you to automate your business without fear, and I want you to use these tools to help your staff and help your business create efficiency. We turn this business around from having a loss to having a multiple $100,000 profit. A few small changes. All of these are in those 4 profit levers. So this is how important that can be. They paid down their OTO debt. They have a better relationship with their family. And this, I'm telling you, we talk about health, like physical health. We need to start talking about financial health, because often the financial health is the triggers for a lot of the other things that happen. So a good business is a good family, is a good community, is good for everyone. That's why you're the hero of the community. Okay, enough about this business. Let's go to a more e-com business. Okay, we're going all right for time. I've probably got 5 minutes, which is great. So then we'll go 15, 20 minutes for Q&A. Happy with that, Kate?
Happy with that.
Fantastic. I talk really fast. I'm sorry if you had to watch this in slow, go 1.5 slow-mo. I always increase my audibles are always 1.7. I can't handle the neutral tone. All right. So this is an e-com business. This is a common, very, very, very common story, okay, with e-com. During COVID, everyone wanted to do a side hustle to start e-com businesses. Great. Highly encourage that. Fantastic. Some of the best businesses are born in recessions. Facebook, ironically, was born in a recession. They started making sales. Everything was good. They had China was, and our foreign trading partners were friendly. Everything was happening, and people were just at home spending money, and life was good for e-com, right? And so that higher sales, lower costs, currency fluctuation wasn't a massive consideration. So everyone's happy. Everyone's making money in e-com. Then D-Day happened. COVID stopped. Everyone went back out. People are now traveling. People have less disposable income to spend in e-com. Even now, we have tariff issues. It's impacting global supply chains. It's a very fickle industry, e-com. And so I'm sure you're online seeing all these e-com businesses making money and killing it and crushing, and we have this new brand and blah, blah, and then we started this other brand and blah, blah, blah. I want you to feel the reality of business sometimes, that these things will impact. So global changes, business is fickle. So I want you to have a business that is high on cash, well protected, nimble, agile, all those things, right? Okay. So with ecom, I don't know how much you know about this, but one of the primary drivers is your gross profit. I always say with ecom, there's two primary drivers. I can tell if ecom business is going to be successful with these two factors. What is your gross profit margin? How much does it cost you to produce this good? And how much do you sell this good for? If your gross profit margin is above 50, 60%, great, excellent business. If your gross profit is 30% or less, or 30 to 40, you're behind the 8 ball right from the gate, because no matter how much of this product you sell, it's just not going to be as profitable to cover your overheads, pay your wage, and then make profit. So I want you to have a think about your gross profit margin, especially if you're in e-com, and I want that number to be above 40%. Okay. So, and if it's not, we need to talk about negotiating with your suppliers, bringing those direct costs down, or increasing your sales price, because they're the two levers you're going to pull to fix that. Okay. The other thing that's important with e-com, there's two more. I lied, there's three. The other thing that's important with e-com is, do you have repeat customers? So if you sell a product to a customer once and that customer disappears, I have to keep spending to get new customers, and that gets expensive. So the best e-commerce businesses get the customer to keep coming back. Alex Hormozy puts it crudely, but Alex Hormozy talks about being a drug dealer, a compliant, not a drug dealer. But the model is we make sure our clients keep coming back. Okay, so the drug in this scenario is a nice e-commerce item or a very compliant legal business. Okay, so we need to focus on, okay, great, I've got this product for the customer, but how's my customer going to come back? What add-ons? What can I do to make sure my client for the lifetime of using this product is going to have an amazing experience, and we're going to add so much value to them? So go on, Kate.
I was going to say, the magic in that is subscription services. You can sign up
100%.
for like the toilet paper that gets delivered. If you can get that, you don't have to sell every time.
That's
And
right.
that's the magic when it comes to e-coms.
100%, completely agreed. A really good example of an e-commerce business, one of the best Australian brands at the moment, is Who is Elijah, the cologne. I'm addicted to Who is Elijah cologne. Okay, and so I go through a bottle. I'm also ethnic, so you could probably smell me before I walk in the room. And so I could probably go through easy a bottle every month and a half or two. And so they have, and I love their scents, and they're all quite similar. So I'm always repeat purchasing. So just having a think about your product, and is this product something someone's going to come back to? A bad example, for example, is, let's say you sell a maternity product. You know, how often is someone going to get pregnant? In Australia, on average, every woman has 1.6 children. So you're going to have 1.6 times a customer can come back to you. So if you don't find a way to support their journey and their postnatal experience, blah, 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 you're going to have a struggle to retain and move that business forward, especially because the number of customers is limited at any given moment, plus the return customers are limited at any given moment. So that's just an example. Now, the third thing that's really important is your ROAS, your return on ad spend. During COVID, everyone's ROAS was through the roof. We didn't have to spend much on Facebook for people to buy, because they were already on their devices. They were already halfway through committed purchasing. We didn't even need to spend much. But what happens is, if I have one-off customers and my cost to acquire that customer keeps going up, and my gross profit margin keeps going down because now my supply chain's gone in the bin, freight issues, shipping issues, import issues, tariff issues, blah, 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 my ROAS is really depleting my business. So we really focus with this business on, let's get back to basics with our ROAS, and how much is our ROAS at the moment, and how high can we get that? There's no special, like, every business has a different formula depending on your gross profit, net profit margin, and ROAS. Everything's a bit different. So get in touch with your accountant, figure out what ROAS you need to thrive, and focus on building that ROAS. So we changed that. We got hired a new marketing agency. We got fresh content done for the business. We got fresh marketing messaging and things like that to help them increase their ROAS, which they successfully did. The margins began to move down because the cost of the dollar, so they import, started going worse. And so this affected their business. So what we did is that we negotiated with their supplier to give us better deals. We've been a long-term customers. We're there for 5 years. Can you give us better deals? And then we came up with better deals. We couldn't afford to pay a wage. With the two above tweaks, by the way, we also increased the sales price. With those three tweaks, direct cost going down, sales price increasing, and ROAS. We really focused on ROAS. We also ran sales for repeat customers. So we retargeted in our mailing list to customers who have bought before. By doing that, this business, by the end of COVID, was not able to afford to pay wages. We now have that business owner paying them wages, a really good wage, to make it worth their time to be in this business. So that was a huge win. Everyone's win is different, and I'll wrap up with this because we got 15 exactly to go. So every business owner's goals are different, and I'm not here to tell you you need the biggest, baddest, meanest, profitable business on the planet. You need the business that works for you. If your goals are, I want to make a wage so that I know I'm not profitable, but I don't care about making profit. I just want to make a wage so that it gives me flexibility to drop my kids off and to pick them up from school and to have the flexibility. Fantastic. Your accountant's job is to support you on that journey. If you're someone who wants the biggest, baddest, meanest, hire everyone, do all the things, biggest profit, fantastic. Your accountant's job is to support you. And if you're somewhere in between, that's also fine as well. If you want to travel to Bali for 5 months of the year and you have a lifestyle business, great. How do we get the numbers to help you do those things? Okay, so that's it for me. I'm going to get you to take a photo of these key action items, and then I'm going to hand it over to you, Kate. I've talked a lot, so it's time for you to ask me some questions.
Great. Take a breath, Jacob.
I will, and I'll take a
You've
sip of
done
water.
well.
Thank you.
All right, I'm going to stop showing Jacob's screen in a moment. So grab that photo. We've got 5 questions in our Q&A. If you'd like to have a question answered by Jacob, please pop that in the Q&A, which is the box along the bottom. Also in the chat box, we will be popping in a link for some feedback in today's session, and also for you to sign up for next week's session, which is on your business strategy. Now, Parth, I can see that you've raised your hand, which is excellent. If you can pop your question in the chat so I can share it with everyone, that would be great. And we'll get to it in a moment. Let's have a look at this first question here. I'm going to pop it up on the screen. Has that come up from Andrea or Andrea?
Let's see. Oh, yeah. Where can I? There's 2. So do you want to go through the first one? Which bookkeeping accounting software would you recommend?
Yeah.
Can I make recommendations, Kate?
You can give some ideas on your opinion. The question here is, it's a not-for-profit in education. They used to have Wave and moved to Zoho, not convinced.
However, 0 Mile seemed very expensive.
Yeah.
All right, let me tell you, you pay for what you get to some degree. There is, I'll tell you some experience. I'm not going to make recommendations, but you can read between the lines here. We are Xero Platinum partners, and I believe the most simple to use software is the one that's going to get you towards the best result. So if you go into a software and it's really complex and it's really clunky and you can't read it and do it intuitively, it's not going to be a good software for you. I would recommend you go with the simplest, easiest to use small business software, regardless. I'm not going to say regardless of the price, but price shouldn't be your number one consideration, because if you don't understand your business numbers, you won't have a business. So sometimes it's best to pay the price to learn the lesson. So I know here Xero are great, but they keep increasing their prices, I know. But it's for you to decide. Obviously, it's your business. What are some softwares out there? MYOB, Xero, QuickBooks. They're like some more modern solutions. I know I can give a couple of examples. So that's what I'm going to say. And I would just go with the simplest, best software. Don't worry about price if you can stretch yourself to get there.
Great, thank you. All right, a question here from Chris. What is your recommended GP margin, so gross profit margin, for creators manufacturing their own products? Okay,
manufacturing their own products. Like, for example, would you be a acrylics jeweler who's like doing their own acrylics? That's what I assume that would look like. I would still love to see a gross profit margin of at least 50-60%. There's another really good book. If you're an ecom, I recommend that you read the book called How to Sell Anything Online by Anita Sarkar. She goes through, there's a one-pager in there that's a really good job of giving you gross profit margins. She actually had a chat to Mark Bouris, and I think there's some feedback between them as well. So 50% plus would be amazing. 60, 70% would be like chef's kiss. 30 to 40, I'd have a look and make sure your overheads, if you have a low amount of overheads, you can actually get away with a lower gross profit margin, because with every dollar of gross profit margin, you're covering less and less overheads. So you've got a really nimble plane, so it doesn't need long wings. It can have just short wings, right? So at a minimum, I would say 35, 40%, and it maybe just get in touch with your accountant to make sure that's okay. But 50, 60, 70 would be unreal.
Great. This one from Jenny Jane. What percent should net profit be?
All right. I would, it depends what industry. Every industry is a little bit different. Your net profit is derived from a couple of factors. How complex is this business? How many barriers to entry? What are the overheads required to start a business like this? Let me give you an example. A professional services business with heaps of qualifications and really difficult to find staff and whatever would have a really decent net profit margin. So for example, a legal firm would have a really high net profit margin, because it's hard to find lawyers. It takes them ages to become qualified, and there's so much compliance around them. So a legal firm would have 25 minimum to 35% net profit margin. A cafe would have much lower net profit margin, because there's just not as many barriers as entry. Money is not really a big barrier to entry, because there's always someone who has the money, so you can find it, right? So if you can start up a cafe for 100, 200 grand, the net profit margin of a cafe, I actually feel, every time I hear someone's going to open a cafe, I know how much heartache they're in for. They're great businesses, but you really, really have to focus on your net profit margin. A cafe, for example, would be 8 to 12% net profit margin. So you can really see how thin that is when the price of lettuce or inflation or casual staff loading or whatever goes up or down. Very hard to manage. So I'll give you 3 examples. Service-based, high compliance business, 25 to 35. Less compliant service-based business, marketing firm, for example, 15 to 25%. Cafe, easier to start, lower barriers to entry, 10 to 15%. Gyms, 15 to 20, 15 to 18. I wouldn't get into business for less than 10% net profit margin. It's just too much heartache for the reward. This is why I always say the net profit is the incentive we give to business owners to go out, compete, create jobs. We need it to be as high as possible. So I hope that's answered your question, but it was very open-ended. So I hope I've given enough examples to cover your specific scenario, Jenny.
Some great numbers there. You're a walking encyclopedia. Someone had said to me once, if you're having a business, think about if you're buying yourself a job or if you're willing to run it as a business.
Absolutely right.
Some people are buying a job because they want the flexibility or whatever the case may be, but just knowing the difference of why you're in makes a huge
100%.
There is a quick question here about a replay of it so you can watch later. Absolutely. That will be coming onto the website, the City of Sydney website.
Great.
Jenny Jane Carpenter loved your answer, so there you go.
Oh, thank you. We'll go through, have we got a bit of time for, I won't read the exact scenario, but I'll just go through structuring, answer this briefly. Yeah, so there's a question here about structuring. I'm not going to give the exact details because there's some confidentiality thingies. So I'm going to go through sole trader company trust. When should you be what? When you're a sole trader, you have unlimited liability and tax rate can go as high as 47%. So if you're in a risky industry and if you're making high amounts of sales above 100, 200 grand, maybe a sole trader might not be the best scenario for you, especially if you have assets in your name. When you're in a company structure, you get limited legal liability. You also get a 25% tax rate on your profits. So this might be a more suitable structure for you if you think you're going to grow a business beyond yourself. If you're operating in a risky industry, if you're about to hire, if you're about to take on some bigger operation, definitely consider company. A trust is an entity that operates for the benefit of other people and helps you manage your profit amongst your family group more effectively. If you have a family group or you have aspirations to really grow your business and explode it and have tons of cash, consider a family trust. So that's my quick 1 minute take on structuring, but speak to your accountant is quite complex. But I hope that's given you enough information to answer your question there.
Brandon's question. Cynthia, if you can just share, as we're answering these questions, share in the chat, there's 2 links. One's for some feedback on the session and the other is to sign up for next week's session, same time, same place, for Van's session on business plans. All right. There's also one here from Bradley about sole trader. Is this the one
Yep.
that you also?
Let's have a look. Trying transitioning. Nah, so it's a question around 30% net profit, gross profit margin in. I have seen this industry does have a lower gross profit margin. You need to do a budget with your accountant to make sure that you can survive on this gross profit margin. So what I suggest is you map out your sales for the next 12 months, you map out your direct costs for the next 12 months, and you map out the overheads you need if you're going to have rent, staff, whatever, and have a look at your net profit margin and make sure that is in a healthy position so that you don't go into this business and restructure into this company without fully understanding where you're going to be. So 30% on the lower side, but if you don't need many qualifications and compliance to get into this industry, it may be correct. It's a highly competitive industry, it may be correct. So have a chat to your accountant.
Industry.
Yeah.
In that one. Jacob, while I get this next question, do you mind sharing up your slide with these 2 links as well?
Absolutely. Share. Yep. I'll share my presenter screen.
Yes.
Okay. I know it looks funny, but hang on.
No, the other one.
The other one. I'm going to stop this share. We'll share the other one.
All right, we've got 2 more questions and we've
This
got
one here?
4 minutes left. That's it. Yes. If you pop to the next slide.
Oh,
this is also the QR code for next week's session where we answer the next question. The next question is, where can I find a reliable debt collector?
That's a good question. Google a reliable debt collector, ChatGPT reliable debt collector. Just go to someone you're comfortable with, you trust, and that you feel, it's trust and comfort. I can't necessarily make any recommendations on the webinar, but just have it. I always say have a discovery meeting with someone, see if you connect, see if you trust them, do a quick Google, make sure they have good reviews, chat to someone if they have used one in the past, get a referral. That's your best bet.
Right, we've got 2 more questions. One from Ben that's just come through on the chat. Net profit for a resi builder in Sydney, please.
Great. 10 to 18, depending on how good you are, and depending on how big your projects are. So granny flat business is not going to have as high net profit margins as a luxury home builder. So somewhere between 10 and 18, if you're doing that, that's probably standard. If you're 15 to 20 plus, good business, very good business. Does that help, Ben?
One more while he's responding to that one. But from Anonymous, come to the country, wants to start a business in garden maintenance, has some customer lined up, estimate to make 80K. What structure should I set my business up in?
Yep. So like we said earlier, 80K garden maintenance. I need you to consider, is this a risky industry for you? How experienced are you doing this? How big are the jobs you're taking on? Do you have a home in your name? Do you have assets in your name you're trying to protect? 80 grand's not a lot, but if you do have I say not a lot, like it is, but you just, when I say a lot, not a lot, for specific structures. So if you're comfortable with the risk of being a sole trader, and just to get your feet wet, sole trader might not be a bad option, but consider your risk. If you feel like it's too much of a risk or you're going to grow beyond yourself, have a company. If you feel like you're really going to blow this business up and you've got a bigger family group, have a trust, own your shares of your company. There's some quick advice.
Great. If you can hit onto that final slide there.
Absolutely.
Feedback. And there's one extra question that's just popped into the chat from Kathy. I'm
For
renovating
sure.
my house, own client and developer and architect, multi-talented. I'm looking to sell within 6 years. That means I won't know my profit until then. Any tips from a financial point of view, regards to profit margin calculation or P&L?
Yeah, that was a lot of info. So I'm just going to go back to that question and grab it.
No, about 10.
It's open. No, I can't see that on my screen.
One moment. Let me just pop it in the chat so it's at the bottom.
No worries. Okay, here we go. I'm renovating my own house, client and developer and architect. Okay, I'm looking to sell within 6 years. That means I won't know my profit until then. Any tips from financial profit margin calculation or P&L? Renovating my house, looking to sell within 6 years. Okay, there's a lot to this transaction. highly recommend you run this past your accountant. And the reason I say that is this on capital? Is this on revenue? How much GST are you claiming? Is it on GST margin scheme? Is it not on GST margin? There's a ton related to this transaction. You can always just do an estimate. Your best you're going to get is an estimate. Obviously, we don't know what the sales price is going to be in 6 years' time, but we can estimate it. And so that'll help you prepare and make sure you're putting enough away for that event. And even when you do get to that event, is it a capital gain? Is it a revenue gain? What are your other scenarios? There's so much to this. So have a chat to your accountant would be my biggest recommendation. And you're not going to get the exact dollar. You have to estimate.
Wonderful. Thank you, Jacob. I've noticed
All
a couple pop in, but unfortunately we're out of time. Even though Jacob spoke so quickly, we've managed to go
right.
through an hour.
That's
So
all right.
thank you so much, Jacob, for giving your time and
You're welcome.
sharing so much wisdom. There are gems aplenty in this. It will be recorded, or it is recorded, and it will be uploaded to City of Sydney website on the Reboot page. Maybe give us a day to do it. And this is the first of 5 over the next 5 weeks. So next week, I'll be back to host Van, who'll be talking about your business strategy. So what you can do, even if you only have 15 minutes for your business strategy. So if you could please, before you go, take a moment to scan that QR code, give us some feedback. And there's also a link in there to sign up for our next week's masterclass or webinar series. And I look forward to seeing you then. And thanks again, Jacob.
Great. Thank you. Thanks so much for having me. And if you could drop some feedback, that would be amazing so we can make sure these are better and better for you and so that we can improve. All right. That would be amazing. Thanks so much, guys. Thanks for having me.
Great.
Thanks, Kate.
Thank you, Jacob.
Cheers.